Market crashes don't destroy wealth, but your reaction to them can. This isn't just a catchy phrase, it's a fundamental truth of investing, rooted deep within our own psychology. When the charts turn red and the headlines scream crisis, a battle begins. It's not a battle fought on the trading floor, but one waged inside your mind, a fierce conflict between primal fear and disciplined strategy. Understanding this internal struggle is the first step toward not just surviving a market crash, but potentially thriving because of it. When markets plunge, a powerful and primitive part of our brain takes over. We see the value of our hard-earned money seemingly evaporate, and instinct kicks in. This is the psychology of fear in its rawest form. Imagine a crowded room where everyone is staring at a single massive screen showing a relentless downward trend. One person yells, "Sell," and rushes for the exit. Soon, another follows, and then a dozen, until a full-blown stampede ensues. This is herd mentality, the deeply ingrained instinct to follow the crowd, assuming that if everyone is running, there must be a good reason. It is a survival mechanism that served our ancestors well, but can be devastating to a modern investment portfolio. Compounding this is the concept of loss aversion. Behavioral economists have shown that the psychological pain of losing a dollar is roughly twice as powerful as the pleasure of gaining a dollar. This intense fear of seeing our portfolio's value drop makes us desperate to stop the pain, often leading to the impulsive decision to sell everything, locking in our losses permanently. History is littered with cautionary tales of this fear in action. Let's rewind to the 2008 financial crisis. The global financial system was on the brink of collapse, and panic was the universal language. News channels broadcast images of collapsing banks and financial ruin. For many, the instinct to sell was overwhelming. They liquidated their retirement accounts, sold their stocks, and moved into cash, convinced they were saving what little they had left. But what happened next? After the storm passed, the markets didn't just stabilize. They began one of the longest and most powerful bull runs in history. Those who sold in the depths of the panic not only cemented their losses, but also stood on the sidelines as the market recovered and soared to new heights. They missed the entire rebound, a life-changing opportunity lost not to the crash itself, but to the fear-driven reaction to it. Now let's contrast this scene of panic with a different image. Picture a lone investor, the wise investor, sitting calmly in their study. While the crowd is selling in a frenzy, this individual is looking at the very same charts, but seeing something entirely different. They don't see a catastrophe, they see a sale. This is the smart investing mindset in action. This investor understands that high-quality assets, the stocks of strong, innovative companies, are suddenly available at a massive discount. They are guided by a long-term strategy and a core principle famously articulated by Warren Buffett: be fearful when others are greedy, and be greedy when others are fearful. Instead of running from the fire, they are carefully sifting through the ashes for undervalued treasures, buying solid assets at prices they may never see again. This isn't about being reckless. It's about being rational when everyone else is emotional. Ultimately, navigating the inevitable storms of the market isn't about having a crystal ball or a secret formula. It is about mastering your own emotions. A disciplined, long-term mindset is the unbreakable shield that protects your wealth from the volatility of the market and, more importantly, from the rash decisions fueled by your own fear. The headlines will change, and market cycles will come and go, but the principles of sound investing remain constant. By choosing strategy over panic and discipline over impulse, you can take control of your financial future, transforming moments of widespread fear into your greatest opportunities for building lasting wealth.